Well, hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in, either live or on the replays. So we do have, last week I was sick, so this week Sean's sick, so he's not able to attend the meeting. So we're going to skip any of the I can answer any questions on earnings or anything, but I'm not going to go through like the detail he did for his weekly review. But if you guys do have questions on earnings, obviously, you can ask me anything during these meetings. So feel free to do that. So what I'll do, I'm going to go through a market update. Obviously a lot of stuff going on out there. And then I was going to go through, last time we went through those state 2, target 3 met, we created those alerts. I'd promised you guys that I'd show you how to do that secondary testing. So that's what I'm going to do today. I'm going to show you guys how I go through and create, the different studies and strategies. Okay, so that's, I don't think we'll go the full hour, so so that's kind of what we'll be talking about. Any questions right off the bat? No, you guys don't be shy. Remember, just I like to keep it interactive. We still have a few people joining, so just, and I'm going to mute you guys as you come in. So okay, so let's talk about the market. Obviously, we just had a couple of transitions yesterday, so that would be the NASDAQ and the Russell. Both, I gotta mute someone. Both went into state 2. SPX still in state 1, and the Dow's still up there. We don't really look at the Dow too much. It's only 30 stocks. I know they talk about it on the news all the time, but the S&P 500, that's 500 stocks, large cap stocks. I think it's a better indicator of the overall market. So, we had a couple transitions there. We'll go through and kind of review that. And then let's jump into the market pulse. So current state percentages, we haven't had too much of a change other than, flatlining here. We're still above, what I would consider, a normal, overbought. So that's kind of like 45 is our threshold for overbought, and we're still 56. So we're still way above those levels. And, you can see we got ridiculous, back in beginning of the year, 77, right around there. So still way up there, not much movement from the state 8s. Obviously we've had a big kind of move down. So I will show you what I think is important here. So we've been monitoring this, and we get little kind of spikes like this for the new 52-week lows. It says 252, that's trading days. So that's 1 year lows, in case you didn't know. And you can always, toggle on and off here. But we kind of notice this, and things would we get a little hairy and then turn right back around. So this one, and the reason we look at this is these are most of the time when we have big market corrections, these new lows really start to ramp up significantly. And then once we get the flat line, which you can see down here, for a really long time, we're in a pretty much bullish type market. So what we're just kind of watching for, if I can do this scrolling good. I'm trying to get a good scroll here. Maybe if I put the highs on there, yeah, that helps. Okay, so, you know, the last time, you know, April 2020, we had like 390. So yesterday we had 350. That's the highest we've had since, you know, that time over a year ago. As far as those lows, so what you know, we got a concurrent drop in the highs. You know, I was kind of surprised. You know, we had such a number of highs on, I think it was on Monday there. You can see how high, you know, we were at like 879, but we had a big spike in lows. So what I'm really watching for is here is, you know, like a ramp up. You know, that'd be real bad things are coming, you know, if it continues ramping up like that with the new lows. So that means the whole market will start rolling over. Obviously, it's been rolling over some here. And that's, I think, a key indicator is just to watch, you know, those lows, and you know, it's not looking good. Do you guys have any questions on that? You know, why I kind of focus on that a lot, those lows. Any questions on that? Yeah.
No questions, but I commented. I think what I feel like it feels like to me is that there's groups that are rolling over as whole groups, kind of like one at a time. And I don't know that the whole, you know, S&P 500 will roll over at once. Like it seems to me like they're picking, you know, valuations that are too high, group by group by group, and I think sooner or later they're all kind of like get hit a little bit. But I see it happening more group by group than by, you know, the entire index all at once. Just what I'd be interesting to hear what other people think about that. That's the way I'm kind of feeling it, and a very couple of the groups that I'm focused in.
Does anyone else have an opinion on that? No. Okay. Most of the time, I think, Dave, you're right. You know, it's just when things actually, you know, when the market corrects, everything falls. You know, like for the most part, everything will come crashing down for, you know, 20, 15%. But I think most of the time when we have little like minor corrections, or, you know, drop 5% or something like that, you know, there's going to be sectors that are, you know, kind of hit a lot harder than other ones, and that's not necessarily always going to be like the same ones. It'll just kind of rotational, like you said. So I agree with that for the most part. Okay. All right. Well, this is, I would kind of equate this with, you know, the earthquake, you know, predictor. So, you know, if we're flatlined, there's nothing to worry about for the most part. You know, once we start getting some tremors, you know, I'd say be more and more careful because, you know, something's coming. Something big could be coming. And that's only if this kind of sustains, you know, climbs up. You know, we see rapid kind of escalation of those new lows. So if you see that, then, you know, it's coming. But, you know, if it comes up and then, you know, not much action, levels off, and then comes right back down to the flat line, then at that point, there's nothing to worry about. You'll see that escalation. So, okay. So enough on that. So let's go through the state modeling. So SPX, you know, been in state one for a long time. So it's pretty much right at its average days. You know, not that we track it that closely, but I think it's a good, overall barometer, but, so we're barely, like right around the average. Obviously we're well above that. We've been well above that target 3. I think now we're kind of right on it. I think as far as the prices, yeah. So we're right on that target 3. So I wouldn't, we can see if that provides support. I wouldn't expect it to. After kind of these big moves, we'll see, but that would be your first term support for SPX. If that breaks, I would assume pretty much expect this thing to roll into 2 like the other ones. So we will pull up what has been one of our best indicators for this ride. Since pretty much for a year. So the 50-day SMA. So we're basically 40, 45 for the SPX. So I think we're about $40 off of that. So this looks like it's going to be tested here. In the next day, a few days possibly. So that'll be a key thing. Can it break through and hold over a few days? If we, where's my chart? Hold on. This thing disappeared down there. So that's why we've been tracking this for a while on that 50-day SMA. So that whole run up, it's pretty much provided support. So especially right up here, been testing, bounce right off. So this is what we're going to be looking at. That's a very key level, I would say, coming up here as far as SPX. So it's 40. So we're right on target 3. As we speak, and then 40, let's call it 40-50 is going to be your 50-day SMA. So let's pull up the Russell. Okay, Russell's just entered state 2. So, I always kind of like to show you guys, on average. So on average, it'll be in there 9 days. So that's what this dash line over to the right is. On average, it'll drop 2.5%. We did add in some new criteria here. Like occurrences, and if it meets the target, it'll pop up right here when and if it does it. But as we go through, so basically when you go into these states, typically this one will come towards that first target, maybe roll up a little bit, try to get to 3 and then fail. That's the typical movement in state 2, especially in bullish markets. If it turns into a bearish market, then state 2 is going to be, the lead off to the drop in the market. So, when that happens, instead of the normal kind of bullish market, it's going to come in here and then go down here and then go into 4. So that's the kind of 2 type of things that normally happen in here for state 2. Depending on the overall market, but most of the time. So as we go forward in the next week or so, this a lot of our trades we target the state 2 target 3. So for a lot of our trades we look for that. So that so that's basically when this price down below gets hit, and then we expect it to go back up after that, and that's normally a really good trade in bullish markets. So so those should, if we have a little more down, we'll start seeing a lot more of those trades. So has anyone just been trading those state 2 target 3s that we created for the daily alert? Has anyone traded those, or at least tracked them?
Yeah, Josh, I had been, but I'm not doing them anymore. But I had originally done them. I probably had maybe about 15 from my original list anyway. And out of the 15, I think I had 3 that lost money, but the others did well. But now I stopped tracking, and I'm not putting anything in the market right now. So
Yeah, yeah. Well, that's good to be cautious.
Yep.
Are you doing the calls, or are you doing like a spread?
no, I was doing straight calls.
Yeah. Okay. Yeah, the one that I built out was bull calls. I think a little more safer, costs more, but yeah, just how they're structured, I think it's a little easier to make your profit and not get hammered. As long as the market doesn't roll over, like it's kind of doing now. But yeah, well, thank you. Thanks for sharing, Gail. Okay, so Russell, NASDAQ, same thing, just went into state 2. Sorry, sidetracked there. Oh, NDX, sorry. The QQQ went into state 2. NDX, so basically, we had talked about this for a while. So the typical movement, it goes up here, kind of retests, and then goes up, and then fails. So that's typically what happens. So this one, never got over that hump for target 2 resistance, and then eventually, really strong resistance. You can see it just trying to pepper up above it, and then finally failed. So now we're below entry price. So I would say this would be a matter of days before, if not tomorrow, where it goes into state 2 as far as, but, let's see, the price closed 13.50. So it did close right above the entry price. You can see it dropped well below and then ended up a little bit above. So it's right above that support, but I think today it's well below. So I would think this going in state 2, and then we'll see how it tracks there. Okay. So overall, market's ugly. I'd watch those. The 50-day SMA, I'd watch that, for SPX, and then, watch those, check those new lows, see what's happening with those. If we get that ramp up, it's going to get ugly. So, so just be careful about, any bullish trade right now, period. Any questions or comments on that?
On the NASDAQ day, what was the date? Can you put that chart back up and look at the date? Let's see where it goes. Well, when it comes up, I'll tell you what I'm looking for. Okay, like just if you look right above, like it says, April 29th, if you take the A and go right up to there where the candles start dropping below the green shaded area right there. What date is that? That's April the 30th. I'm just wondering how close that drop aligns with the week that most of the I'll say the FANG stocks, but I don't want to, but those kind of stocks, a lot of them reported that 1 week. And then you see after that, you see a weakness. And to me, I think there's cause and effect for most changes in trends. And kind of that's where I'm looking at this one. And that was where they started talking about, inflation and inflation hurting high growth stocks more than others. And they keep talking about that. And, those stocks are weakening, over time now. So that to me is kind of like the initiation of a change in sentiment there that, inflation is now, the Fed says they're not worried about inflation, but almost everybody else is that can look at reality, says, oh, there is lots of inflation out there. So how long is it going to be before the Fed does change its posture that it said it wasn't going to change for a couple of years? That's the fear, I think.
Mhm.
That's my feeling, that the fear is out there, and that's why markets are dropping now, because there's that uncertainty, and uncertainty. What did the VIX do? The VIX is back up to 25 or so. So,
Right.
that's confirming that portion of that thought, in my opinion. So that's why I think that, things are going to all roll over in time. And, like your comment was that everything drops really fast when it's a fire sale and everything drops.
Mhm.
If a Fed changed its position and said, oh, we're going to have to start raising rates, I think that's when you're going to see everything sell off in days.
Yeah, absolutely.
So anyway, that was the reason why I thought things would roll over one at a time rather than everything all at once.
Yeah. Thanks, Doug.
Josh,
Josh?
Robert here.
Yeah. Hey, Robert.
Yes, do you watch commodities very closely?
No, not too much. Maybe like, crude oil, gold a little bit. But
Well, yeah, I don't, but somebody who I know that was a professional.
Mhm.
He seemed to think that with the impending inflation, that commodity prices will take off first, and then the rest of the market. Right now, we're seeing 2x4s and lumbers go through the roof.
Mhm.
So it looks like the commodities are heating up.
Yeah. Yeah. And I think in general, I mean, I don't know what your guys' experience is, but, I'd say the grocery store prices have gone up. Like eggs went up $1 from when I, over like the past couple of weeks. Like I was buying a steak, it was $2 more. I was like, what caused that change? Normally I don't notice it, but this was definitely noticeable. I mean, it's like but yeah, the base materials will definitely, if there's inflation, all those are going to go up. Hard assets pretty much go up when you have inflation. So that's like housing prices, all those. I would think crops too, but those could be a little different. But yeah, I'm definitely not the commodity expert. Sean used to be a commodities broker, so he may, be better suited to answer that question. But I would say definitely, a lot of those, if you think of XLB, that's kind of like the ETF that tracks basic materials. So I would think that those. Those prices are all going up for the most part with inflation. So I didn't really live through, I was just born in 77, but some of you guys lived through, that real bad inflation back then. It's almost like a repeat from what I've read. It's like, we're getting oil, gas shortage and inflation ripping. So I don't know if anyone wants to share experiences from like the early 80s, but that's kind of what you can kind of map it to something like that, I would think.
Josh,
Yep. Hey, Jane.
Jean, do you think, I mean, a couple of things I wanted to ask, and I know Dave always has some interesting comments on some of this stuff. Do you think there's any hedge funds that are helping drive some of the market down, even though this is kind of all across the board? Because is there any sector that doesn't seem to be affected? I mean, I guess that's kind of a two-part question, isn't it? Anyway, comments on that?
Well, I just think that, the hedge funds are all over the place with different types of strategies. I mean, there's ones that are in the headlines more. I don't know how much they collaborate. I'm not in that world. I would think with any group of people with like large sums of money, they can move the market if they, work together.
Yes.
Um,
So,
so I don't know how much of any of that goes on. What was the second one?
well, any sectors that don't seem to be getting hit as bad? I haven't researched that. I'm asking.
Yeah.
I'm just asking.
Well, it seems like the
Other
industrial,
than the crypto.
yeah, yeah, other than crypto, it seemed like industrials and the materials, basic materials, so it's like XLI and XLB have been doing pretty
They're
well.
holding up better.
Yeah, and those are, I would say, inflation type. They're going to charge, they're going to get more, for their, whatever lumber they're selling or their, steel or whatever. So if all those go up, that's, they're going to charge more, make more, all that.
You know,
Pass it along. Mhm.
Last week, I was really kind of only impressed with Home Depot and Lowe's because it was going up. And now today they're going down. I'm like, good grief. You can't seem to get in at the right time right now, I guess. But so because I was thinking those would be holding up pretty well because of lumber and different things.
Mhm.
And maybe they will, because they do report, I think, next week. So maybe this is just
Yeah.
the overall market affecting it. But
Yeah, I think most things are getting dragged down right now by the inflation scare. You know,
I do believe there's some manipulation, though, don't you? I mean, who's that laughing? Is that you, Josh, or Dave?
yeah, there's big manipulation. It's called the
That's
Fed.
why I thought maybe
The Federal Reserve is the ultimate manipulator.
yeah, that one.
Hmm.
That's what I was thinking. The hedge fund managers too are trying to
Yeah.
make big bucks, drive it all down so they can buy it all back. I don't know. But of course, this is kind of broad, so I don't know. It's just discouraging.
Yeah, I mean, obviously I would look for good entry points for things, like when they hit the state 2, target 3, that's kind of a good one. Or, like strong names go back in the state 1. So it's just a matter of being patient and not, trying to time the market exactly is very, very difficult. So I would just look for good trade setups and then, make sure you're bullish on the market when those setups come through, or just put them on the back burner until you turn, until you're bullish on the market. So.
Yeah. Thank you.
I have a comment back on Gene's first question. This is, I just read an article, I think it was yesterday, maybe it was the day before, but it was real recently. I can't remember exactly which media outlet, but the headline was what's being shorted next.
Yeah.
And the answer to that was, in at least the author's point of view, was that the most shorted area now is high yield bonds. High yield bonds because, and the reason why the author said this was that companies or hedge funds that are taking that position now are thinking that there's more risk in those areas for those bonds to default, especially if the Fed, which Josh just said is the prime manipulator, big manipulator of all of them, starts to pull back on their bond buying. We're going to buy back bonds to, make sure the stability in the market. But if they stop doing that,
Yeah.
then as the short guys are saying, well, there's going to be a lot of high yield bonds that are going to start to default. And that's where most of the short money has been going, according to this source that I read. So.
Yeah, I don't know if, as far as those high yields, a lot of those are the oil producers. So I would say, a ton of them are actually oil producers. So if oil keeps going up, that's actually a good for those bondholders. Yeah, if they start raising rates, anything that's not a fixed, APR or fixed coupon, they're going to feel the pain. So I think that would be, if rates start going up fast, anything that's variable rate is going to get, is going to really start feeling the pain. So that's where I would say the biggest danger area is, any kind of variable debt. As far as, if the rates, keep going up quite a bit. Okay. All right. So that was the market. Now we got a half hour. That's good. Thanks for contributions. So
One other thing too.
yeah.
I never quite understood this. Okay, so Jeff Bezos sold $5 billion worth of his shares.
Mhm.
What does that mean when someone does that? I mean, does that mean the stock is okay, or it's going down, it's going up? What does that mean?
Well, that means he's, he's
Unloading?
he unloaded quite a bit.
Yeah.
There's quite a bit of that going on. Gates is getting divorced, so I mean that's a couple billion he put over in his wife's ex-wife, soon-to-be ex-wife's account. So yeah, it's that just means they if he had a
They're not in trouble though, right? I mean, what?
well, I don't think so. I mean, there's limits on, depending on what his position is, what he can do as far as sales and things like that. And he obviously has to disclose it, but I think that's a whole kind of research arm people go into is the insider selling. So people that, own a lot of shares or, directors in a company and kind of trying to analyze, what they're doing to see if they can predict stock movement from that. I haven't been tracking Bezos, but, if you keep selling a bunch, then
Yeah, I haven't either. I think, I mean, I don't own any Amazon, but I kind of like to watch it because I mean, it just kept going up, up, up. And so I kind of like to watch it and read stuff about it. But when I saw that, I'm like, good grief. I mean, it seems like a lot of people have been selling shares, but I mean, that was a lot, 5 billion. And yet you still see where he's planning on building this in British Columbia and this something somewhere else. So, and I don't think it really affected the stock that much. I'm not sure, but I was curious because I see that every now and then, and it's like, why are they doing that?
Yeah.
Unless they just need the money.
Well, I mean, you can also look at, the market cap of it, right? So if he sold, it's a 1.58 trillion. So he sold this 4 billion. So it's not that big a, representation of, the market cap.
Oh, okay.
Yeah. So, 4 divided by, 1,587. That's how much he sold percentage wise. Yeah, that's the way you can look at it.
Those numbers are too big for me, huh?
Yeah.
It's hard to understand. Okay, thanks.
It's a lot of money though, still.
It is.
Yeah, but it's such a big company. Okay. So I was going to go through and show you, basically how to backtest and add in secondaries. So I had a new strategy for you. So we're going to go into the signal. So what we're going to start with is an EMA So the EMA crossing the SMA. Why does it keep doing that? Okay, so basically when the EMA, and this, I guess we could arrange these a little better. 50-day crosses above the 200-day SMA. So that's our entry signal. 50-day.
Is that more accurate than an SMA 50 crossing? That, I mean, why did you pick the EMA?
The SMA, I don't know. The way I've tested quite a few in the past, but I like usually for shorter term, I use EMA, and longer term, I do SMA. Because
Okay.
exponential, it adjusts it a little bit more towards the recent price. So that's the only reason. I don't think it'll make a big difference, as far as these, the 50-day SMA crossing. That should say SMA, but yeah, I don't think it'll make too big. It may be like a day or two difference. So okay, so that's the entry. And then, we'll just do our regular time stop. If you guys have questions on this, I'm just going to skip that. We've done these a few times, so it's a 150-day time stop. So whenever that signal hits, it'll close out automatically. 150 days or whatever profit and target and stop loss we have. Okay, so now we just fill out our fields. Golden cross. So I'm just going to do from 2020. Yeah, I think that's, so that'll give us like a year and change. So we'll run in the background, and then also, so for this, I'm going to do a spread strategy. So I'll do the liquid option 2 legs. I'm going to focus on like bull calls. So that's it. So we just, we already have our signals in here, and then we just hit next. So it'll run in the background. I already did it before, so we don't have to wait. So, because it'll take a few minutes, or it'll take 423 seconds. So we'll just continue on. Okay. So we did, last time we did a bull call, so we're going to do that bull call again. So basically you have to name it, and then select your strategy. I know we've done this in case there's anyone new watching it. Basically we're picking our mid price here, and then our minimum days, so it'll look for 45, 46, 47, going out to 100 for the expiration. Yep.
Josh, was that, oh, you had the bull put or the bull call? I'm sorry.
Yeah, that's bull put. Yeah, sorry. Yeah, bull call.
Oh, okay.
Yeah. So, we can change it to whatever we want. Normally I do like 60, you can do 45. So, I like this structure where we're buying right above the lower standard deviation and then selling right above the current close. So I like that one. And then, we're looking for 25%, and, we can change it to 75, whatever, you can change these to whatever you want. So we'll do a 75% stop loss. And Let's hit next.
Hey, Josh, this is Lee.
Yeah, Lee.
Is this a bullish trade or a sideways trade or a
Yeah,
bearish?
it's a bullish.
Okay,
Yeah,
Thank
so
you.
we're testing across the 50 crossing above the 200. So you could do the same for like a bearish trade to try the 50 crossing below the 200. You know, they're pretty decent. They don't happen a lot, you know, so if you have a fairly big list of stocks, you know, you'll maybe get like 100 or something a year. I don't know, something like that. So,
okay, thank you.
mhm.
But now, speaking of bearish trades, you've done that? You've looked at that, and does that work as a bearish trade in a down market?
Does the what?
Does it have a good average of success?
No.
Okay,
Not for the bearish. Yeah. I think for individual symbols, but as a whole, you know, like a big group, no. But I think it can work for individual symbols.
okay.
Yeah.
All right, thanks.
Mhm. All right. Hopefully we're not going to be slow here. So it means it's running. I can click on that run and it'll tell me how many it's done. So 90. Not that good right now, right? We'll see. We'll see what happens. Yeah, so what I wanted to show you as that's running. So so this little button up here, it's called the quick create, or I call it the quick create. So if we open a new tab and just go into that signal, oh, plus there. So now this is kind of where, so what I do, you know, I'll be running a back test here. And then if I want to have a different signal, I'll be creating it over on this tab. So, you know, let's just say I want to do for my next test, let's just say I want.
So is that quick create starting off a whole new idea, or is it jumping in the middle of an idea and adding something?
You're just creating secondary signals. So,
Okay, so
yeah, so like you're testing, I wouldn't think of it as ideas, right? I would just say, okay, you want to do a secondary test on that back test that we just did, right? So my first guess would be, okay, let's look at correlation. You know, that's a pretty strong indicator. So let's test, you know, stocks that have good SPX correlation, you know, as a secondary. So if they don't have good correlation, it'll reject the trade. You know, so we'll see if that improves the strategy or not. And then, so that'll be one. And then I can reset it and, you know, I can add in, you know, whatever signal, you know, I could on board volume or whatever this one is, on balance volume. Or, you know, you can use, you know, relative strength. So you can add and you can combine them too. So you could do relative strength, beta, and, you know, correlation. So the more you have, the more restrictive you make it, the you know, the more rejects you'll have. And as I walk through it, I think you'll understand. I'll just do a couple examples, and I think you'll understand. Maybe I'm not explaining it exactly right. Okay, so this is the signal that I want to test first, right? And then we can see how it does. So basically the correlation SPX over 252 trading days, so that's 1 year, is greater than 70%. Okay, so 1 year SPX greater than 70%. Okay, so now if I just create that, so now that signal is available to, I can use it in a screener, I can use it anywhere, but I'm going to use it in the back tests once this thing finishes. Maybe I had more trades than I thought. Thought it'd be like 100 something. Whoa, we're at 358. Pretty good though. Looks pretty good so far. It's a slow start, right? But okay. So we're at 358. I don't know how many there are. You can always check how many there are. You go to your entry exit dates in the organizer. 451. So we're almost done. Okay. So if we just leave that signal open, so you can see that SPX score. So you have 795 different signals in here. So yeah, that's just one of them. But that's what I do. I just kind of create them and then I test them as a secondary. So we'll hopefully be done here in a second.
Are you going to show us a stock that has matched all this criteria? I mean, or do you know one at this point?
Oh, for today? No. No, so basically the idea is, I give you these strategies and you guys can create alerts on them. So they'll just populate, forever. It's like the gift that keeps on giving. Yeah, you have state 2, target 3, you got state 4, if you built that one. And this will be another one, I think.
Okay, while we're waiting, could you just explain why you took the stock list that you did? Because you went to a stock list for
Mhm.
2 legs. I didn't
Yeah.
understand that.
Yeah, so basically, if I know I'm going to be trading a spread or focusing on spreads, I'll do the 2-leg. They all have like 2 legs, so that's why we named it that. So if you're going to do if you're going to trade good Lord, calls off it, then you just use the 1 leg. They're not going to be terribly different. There'll be a
Okay.
few more in the 1 leg than the 2.
Okay, so, but basically, I mean, it's a stock list that you've applied spreads to, but
Mhm.
basically it's the same stocks, maybe a few less than the regular stock list.
Yeah.
Okay, gotcha.
Okay. So pretty decent, right? 85. Only 1 rejected. That's got to be a Delphian record. Only 1 rejected. So and pretty good efficiency also, I see. So this is the kind of thing I like, where the gains are basically like triple the losses. So obviously, a good starting point, right? So from here, if I want to see, okay, can I improve this, right? So I just go into the little sandwich and I'm pretty much going to leave everything except for now I'm going to put in my correlation, right? So the 2 options here, and I think they're explained, if you hit the little I button. But this means if it doesn't meet my criteria, then reject the trade. And then you can say, if it doesn't meet it, keep checking and enter later if it finally does. So I always just use the reject. I don't delay it ever. So, tell me right now, does it meet my criteria of, it had to have that golden cross and now it has to have correlation greater than 70. So I also make a little note here. In the description of my secondary, because as you go through, I may have like 40 different tests, and I want the little comments here telling me what I changed from one to the other. So, after that, if we, we could do lots of different things. So we could, make the correlation more restrictive. We could go up to like 85%. We could, test it at 50% instead of 70. So you can see the number of iterations, the things you can do is infinite. Or you can, pull in other, type of state modeling. State modeling, I usually, I don't normally test it as a secondary because I can pull up in that run data the breakout. So if you click in that run, I can group it by state. It does it for me, so I don't need to like secondary test these. So you can see like the win percentages for the various states, the number of occurrences. So 5 and 1 are your biggest occurrences. You can group it by symbol, and I've shown you guys that before. You can sort all these. General Mills, watch out for that one. When Golden Cross, it's money. And the year, if you do bigger tests, obviously you can do it. And then we have our Delphian grade too. See if I always just kind of click through them to see if things break out. It's like, okay, C is 80. Maybe if you see like negatives somewhere, that's kind of what I look for. Otherwise I'm not really going to exclude too much, even though it's 80%. If it was like 60 and, like not making money, then I would probably exclude that state, but nothing here I see. So, okay, sorry. I'm just, let's go back to, all right, it's still running. Do you guys understand like the basic concept of the secondary?
Yeah, that's pretty cool.
Yeah.
That's pretty cool.
So Josh, so what you're doing is doing more restrictive indicators, right?
Yeah. I'm trying to tighten it up and find things that improve, my profits, win percentage, pretty much all of them. By trying to find trades I can eliminate.
Okay. And when you said group by indicators, by symbols, I mean, you only have one symbol for a stock. So what do you mean by?
What do you mean? Oh, that was in the run data. You can have the readout of every symbol that met criteria and tested. There's like 400 of them. So you can group them by symbol to see which ones do well and which ones don't. You understand?
No.
Okay. So
I mean, I think of, one symbol, one stock. So when you're grouping something, I'm thinking, you're talking about a particular sector or,
yeah.
or
No, so in that run, so there may be multiple occurrences for different symbols. So these only had one. ABC had 2. So we're just grouping them, by the number of occurrences each symbol had.
oh, okay.
Yeah, so we're like totaling them up.
Yeah.
And then you could sort them. So we're just we're grouping them by the symbol.
Okay.
And the occurrences. So probably not the best verbiage. Okay. So waiting for the drum roll. There we go. Okay, so now, all right, so the first one, SPX correlation greater than 70. So we had what, like a nice little win rate improvement, a ton of rejected trades, slightly improved the profit loss per day, a little longer in the trade. So we're doing the same strategy too, both all, and like efficiency dropped a little bit. So overall, not that great, right? The first strategy worked pretty good. So from here, we could add in, another indicator. I didn't. Let me see. I'll just do another example. So if you did greater than 50, and there's just so many, it kind of blinds me as far as the testing, right? So like you can add in different things, the 14-day greater than, 30. So you can add in multiple indicators and, test them together in the same way that we did, this SPX correlation. Obviously I said the more restrictive, the less you're going to have testing wise. So, so I don't think we need to keep doing the iterations on this. I think we're at the hour point. I wasn't planning on going this long, but you guys are asking good questions. So, if you guys, can replay this, I think the base strategy is pretty good overall. That 85%. I'll look at some other indicators, to see if we can kind of improve it a little bit. But I think it's a good, a good start overall for that strategy.
Hey, just real quick. So if you want to do, okay, I want to do a different signal, but I want to get it, run it against run one. You just click on run one and apply the signal. Okay.
Yeah. You just go in, you create over here. Let's call this one blah. You hit create. So now whatever, if you want to run it, change run two, you'd click on the run two one, like the run one here, it'll be blank. The run two will have this one in the comments and the secondary already in there. So yeah, whatever one, yeah.
Got it.
Okay. All right. We did. Joe, are you there? I just want to. This didn't go quite as fast as I planned, but yeah, I did want to let you at least introduce yourself, and well, if you're available and not asleep.
Hello there, Josh. Can you hear me all right?
Yeah, very great.
Okay. All right. Well done as always. And hi, everybody. With Sean not making it today, I just figured I'd jump on, say hello, introduce myself. My name's Joe Burgoyne. I was lucky enough to join the Delphian team back in December. I known Ashok, for I guess most of the time that Delphian has been in existence. I think we met probably back in 2014. My previous position, I met him out on the circuit, basically going around talking about options. I was fortunate enough for almost the last 12 years to work for the Options Clearing Corporation. On the option education side, we were the Options Industry Council. I was one of a couple guys who used to go around and talk to everybody about puts and calls. So, back in December, Ashok and I, got to talking, and as I say, I was lucky enough to join the team back then. So I just want to introduce myself. I'm from Philadelphia. That's kind of where I am now, outside of Philly. I live in southern New Jersey. I was lucky enough to trade the markets as an options market maker and specialist on the floor in Philly for 23 years. So I love the markets. I love options. I'm also a big believer that options should not be complicated. If you want to, you want to make them complicated, go ahead, but I don't think there's any reason to. So, traded the markets for 23 years as a market maker, which was a blast, from kind of the early 80s to the mid 2000s, and then, OCC for 12 years. So really thrilled to be part of this team. I didn't know Josh or Sean, and it's great to have gotten to know those guys over the last 5 months. I know your group, and your group is certainly held in very high esteem by the gang at Delphian. I've enjoyed listening to these conversations for the last few months, and I guess going forward, Josh, maybe I'll chime in from time to time. But the point was just to introduce myself. I could certainly start to go off and talk about, some of the things that you talked about today, inflation, the markets.
Yeah. I'm sure they'd be
and
interested
all-
to hear any, synopsis on market overview type stuff.
Hi, Joe. Also, do you have favorite option strategies?
I think it depends on what I love about the markets are tracking levels. So I was a chart guy, and so to combine, like simple stuff like Fibonacci, things like that. But the power of what Delphian and the versatility that Delphian adds. I mean, I'm just scratching the surface, seeing it all, and it's really it was very easy for me to join the team. Just seeing the vast depth of what, these guys have built over the last, 6-7 years. Favorite strat?
Yeah.
What's that?
They're very good at what they've been doing. Yeah.
There's so much, to me, my overwhelming takeaway is not that there's too much, but that it is overwhelming. So I think Josh and Sean have alluded to a little bit over the last few months. We want to try to, maybe reorganize things a little bit, maybe simplify some things, but it's staggering the power that's here. And in terms of favorite option strategies, it really depends on, the directions of the market. So I kind of start there, but, I'm a simple guy, bull call spreads, bear call spreads. You guys were talking about the double, I think the double time spreads last week. Some of the name, and was it Gene who asked the question?
Probably, yeah.
A lot of the names for option strategies I can't stand. I think it's a total turnoff, because you start talking about broken wing butterflies and stuff like that. What the heck is that? But big believer in trying to keep it simple and just understand what the Greeks are, and then going forward, just use this spectacular tool that Ashok, Josh, and Sean have created over the years.
Well, nice to meet you.
Dave, I'd like to say, glad to meet you too, Joe. I want to follow up on one of Gene's questions, though. And you said you were a market maker for a number of years at Philly. So I'm guessing that you had a whole different perspective of the use of options with your making of markets as risk management and hedging tools than particularly this group probably sees them as either income generation or short-term swing trading kind of thing to generate dollars and money from speculation to some extent. So I think that's why she was leading into what's your favorite strategy, because that's kind of where we're coming from, not so much as market makers on this side, but
yeah, just more the simple retail people here.
Oh yeah, and hey, believe me, I think simple, options have such a bad rap, in my opinion. Now, option volume has completely exploded, as I think most people know, over the last few years. I mean, absolutely exploded. I mean, the market right now, I think we're doing 35 million contracts. No, it might be 39 million contracts a day, 39 million contracts. I mean, our previous record was 2019 when we did 20 million contracts a day. And that was, I forget what percentage we were up in 2019. So, I mean, there are a lot of people using options, and even as now, I think the thing that was different for me as a pro trader is I used to trade really big positions and kind of keeping it, black and white. Are you a long gamma trader or a short gamma trader? I mean, that to me is one of the really big questions when it comes to options trading. And
You're going to have to explain that in one of the sessions one of these days.
Well, these guys do a wonderful job, I think, with the weekly updates. I think
They do, but I'm just talking about the long and the short gamma. We haven't really bothered with that.
One thing I think we want to do going forward in time. I mean, our priority right now is to try to reorganize, some things, just because there's so much here that people can't get to. But in time, I think we will, add an element of pure options education, and prove to everybody that it really is pretty darn, not easy, but you just don't have to get it complicated. And that's the thing. That's where I think options get such a bad, rap. They're complicated and they're risky. They shouldn't be complicated unless you want to make them complicated. And they're risky if you don't know how to use them, because it really is about income generation and risk management. Then just go from there.
I agree. Thank you.
Yeah, well said, Joe. Well, anyone else have any other questions for me? Yep.
Well, this is Robert. I have a question for Joe. Joe, as a market maker, in trying to manage the risk, did you use more futures or static delta? What did you do to?
Yeah, I really didn't trade the future side. I was on the stock side, and the key to liquidity, and Josh and Sean have done a great job paring down the liquidity list. I've heard us talk about it over the last 5 months. It is such an important element, and the industry has talked about liquidity for a long, long time. And the number of market makers, as I think you probably know, has shrunk dramatically because it's such a different business now. Back when I was doing it, you could start a business for damn near nothing. Now you need, I don't know if it's hundreds of millions of dollars, but an enormous amount of money to be competitive. And, it just making markets in this time frame is just completely different than how it used to be, Robert. Just very, very different.
Sure, thank you for that.
All right. Well, I think that'll wrap it up. Went over our hour. But yeah.
Sorry, Josh.
No, I gave it to you at like 1 minute till, so I ran well past what I thought. Anyway, they were asking good questions, so I don't want to, stop that. So, yeah, thank you all for. Go ahead.
One last thing I would say, Josh. I'm certainly here, like Josh and Sean, to support all of you. So my email is joe@delphiantrading.com. Don't hesitate to reach out if you'd like to.
Yep.
Great. Thank you.
Yep. And yeah, thank you all for attending, and feel free to reach out. I don't know when Sean will be back. Hopefully by the end of the week or next week. But he's pretty bad, so hopefully he'll be back for next week's call. If not, then we'll continue on. But thank you for attending, and reach out if you have any questions. So thank you all.
Thank you, Josh.
Thank you, Josh.
Thanks, Josh.